Hey, good morning. It is Julie. It is October 13th, 7:02 a.m. Take a quick look at what's happening overnight. We had China imports show the picture of what's happening with their devaluation of the currency that started in August, where the country China is restricting the imports, wants its country to use its own manufacturing base in their own economy as they try to shore up their currency, and they've restricted imports greatly, which has dramatically hurt the other countries. The British pound came off last night. They're now officially in a recession, a deflationary recession. Their CPI dipped below zero negatively, and so that caused the pound to plummet and the euro to gain a little bit more strength. We've got our own Brainerd, who came out and said she's urging patience and raising risks amid global risk, which makes sense because we've got to be realistic about what's happening in the global economy. I'm not sure if this is going to happen. They seem almost on a day-to-day basis, either they're going to raise this year, they've said that they would, so they're going to have to do it, or if they're going to exercise an abundance of caution and wait for these global event risks to manifest themselves. Also overnight, the IEA oil market report indicates that the additional Iranian barrels of oil should be oversaturating the market even more, and that this will impact the oversupplied condition through the entire 2016 time frame, which we've known, all of us crude traders, as soon as we realized that the Senate had the votes to pass that Iranian deal. They've got 50 million barrels of crude sitting in tankers ready for market right now. I mean, right now they do. So as soon as that ink dries, they're going to be dumping that on the market. I have a little bit of caution, though, in my crude outlook. I want you to see this down here. Typically, when you get into these very oversold regions, you start buying, okay? And right here at between 44 and 45, we've been going up. However, we're starting to slip back down. This energy report just came out. So we're going to be testing 45 again. Here's the before the O's. And see if that 45 level holds. If that 45 level breaks and we get into the 44s where we were selling, it's going to really fall. But I think that there's going to be a lot of market prop up at 45. So I'm really looking between 45 and 50 as a consolidation, and perhaps follow this trend line here as the trend line break. When it gets down here and then breaks that trend line up will be the uptick. And the only thing that would upset this technical analysis for me is anything that would happen coming out of the Middle East, or Russia and Syria, or Russia and Ukraine. Just anything militarily will affect the price of crude oil, which, don't ask me why, because our products are refined and sold in the international market. I just, I just go with it. We're not selling raw WTI in the marketplace, so it really shouldn't have that big of an impact that it does. But anything militarily, it does impact the market. What I want to look at today is the markets are mixed. So we might have some retracements from yesterday's big moves. If we pull up a 60-minute chart, you can see a huge flush down, and we've stabilized at this previous support level that I have drawn on my chart. And so here was the first test of my what was resistance becomes support. So this should come back up, I'm thinking, to 48.42 to test this point of control, this previous point of control would be my best guess. Sort of retrace up to here today. If we break this level today, that would be really soon. And I'm just not, really seeing that much of a continuation down today. We've all known that EIA report was out there, that IEA report rather. So I'm just mixed and crude today. I'm not really strong on my direction. Currently, our direction is down. On my direction guide, we flipped from up to down, and we had been up, and now we are down. So I will wait for those retracements to come in. I don't trade the top or bottoms anymore. I used to try to take the tops and bottoms, but I don't take the tops and bottoms anymore because you just never know where those come in. Like right here, it knocked you out. So I wait for my templates to show me when it's time to get back in and hold a trade. Yesterday, I was working in the afternoon. I'm a bookkeeper for a small Houston company, and I go to the office 2 days a week, and I work from home 3 days a week. I work in the afternoons 5 days a week. So I trade in the mornings and I work in the afternoons. So it's like the perfect life. It's the life that I want, and the life that I love, especially mixing the trading in it. So I manage risk in the morning and I manage risk in the afternoon. So I guess you could call me a risk manager. And this is the best way I know to manage risk, is to pick a direction and then trade that direction once the retracements happen, because the only way to win in this game is not to be Tommy top tick, right? You want to buy the bottom or sell the top. So just like a market maker. So I want to go through something real quickly on the one of my favorite trading books, and that is about optimizing systems. People always want to backtest and show performance reports, what happened in the past, to decide if they're going to trade a system. And you've got to understand that that does not work. There's a reason for these risk disclosures that the government requires. Some of you know that I had a 35-year background in legal, where I worked for these big law firms and we represented our big corporate clients. I was in the corporate litigation section since 1991. Before that, I was in commercial real estate. I did the commercial real estate boom at the end of the 70s and all through the 80s and early 90s. Then 91 to 2012, commercial litigation. There's a reason for these disclaimers. It's because it does not work. You can't take a trading system, back test it, and expect to get the same results. Jack Schwager, who all you people that are trading know who he is, he wrote the Market Wizard books. Well, he was interviewed by Bruce Babcock, and he did a study in 1984 when he was doing his major trading career. and on optimization of trading strategies. And in 1984, Schwager confirmed that you cannot take a particular system's best performing parameter sets for a period of time to see if they would outperform a randomly selected market in the future. And he confirms that in this book, The Business One Irwin Guide to Trading Systems. And he found that it's just an exercise in futility for trying to take a specific trading strategy and optimizing it. It does not work. And I found that out early on after trying desperately to backtest and optimize and backtest and optimize. It just does not hold water. You've got to understand where the algos respond in the market. And it's all about these levels. The algos have to have something to trade on. And when you have a plan, a trade plan, like a direction guide plan system that I've incorporated, open to close, prior open to close, and I'm incorporating the smaller time frame market profile where I want my profile to be above or below that previous value area as a generalized trading strategy to get me in a move and hold that move. I do look for these overbought, oversold signals. Some people use RSI. I like value areas. I like the bottom or top of a daily or 30-minute value area. And I like these Keltner bands because these are volatility based. And when I'm in a market that is going up and I know that I want to buy low, I want to see price come in to a point of control area, especially if it's at a Keltner channel and the bottom of a value area. When I get all three, that is a way to optimize a trading strategy. When you see all three of those, you've got bingo. Now, that's not to say that you're not going to get stopped out, like in this example right here, where it comes back to get the stops because the market is saying that was just too easy. I can't let, the market makers are saying, we can't let you have that easily. We're going to try to shake you out of your position, and then we're going to send it on up. And where if you have position size and know how to press your winners, you would get involved on that second move after that shakeout. That's trading. When you see a shakeout by a couple of ticks, 5 or 6 ticks, and then the market turns back around at that same oversold area, going back in your direction. But I also like slope. I don't like taking a flat sloping moving average or point of control. I like to see a slope in the marketplace and then take those retracements on that slope as a higher probability trade. So there's some standard trading strategies that are just consistent that you can count on to get you back in the direction of a market trend. And when you start realizing these locations, then you can come in and put a higher position on and take your short frame target profit target, trading to a support resistance level or on the 30-minute chart, and taking the trade off for a short-term scalp that's going to net you some money. So like if you took this on 5 or 10 contracts, you're done for the day. That's all it takes. You don't have to sit there and look for any more trades. You look for 1 or 2 opportunities. You have to one of my customers told me, you have to have a reason to enter the market. You have to have a trade plan, you have to have a trading strategy, and then you have to be able to confidently enter into it and hold it during the shakeouts, because the market makers will try to whip around on you and get you shaken out before turning the price action back to where it was originally going. And then picking your time frames, your best trading periods to put a trade on. When the market is just whipping around up and down, you've got to be able to recognize those time periods and stay out of the market, because it's not going to do anything. But when it is jiving with what you're seeing, there's no better strategy, in my opinion, than using these overbought, oversold levels to enter back in the direction of a trade with a tight stop and be able to hold a position for a great gain in the market. And just having the ability and the confidence in a strategy or a system is all you need. And knowing what you're looking for, whether it's RSI, stochastic, Keltner channel, find something that you can see that is repeatable in the direction that you think the market should be trading, and then execute. You're not going to win all those trades. Nothing is guaranteed, but you're going to win enough of them that you should be able to make some profits. And when I'm incorporating other things with my strategies, like the market analyzer to tell me, yes, I want to be concentrating on gold right now, even though it's showing a negative, I've still got weekly, daily 60-15 going positive, so I will be waiting for those deep dips to go back positive if my direction guide is positive. So I put all my steps together to give myself the best opportunity, and now I've got my 300 to 100, 1 to 3 ratio for on the bid ask to confirm a trade entry out of a support resistance area, which I also have on my volume ladder. And when you put all these pieces together, you can confidently enter a trade. This isn't over optimization, this is just trading. And that's why you need a template and not a specific pull the trigger execution system, because it doesn't always work. Nothing can be curve fitted to repeat in the markets in the future. That's why the CFTC requires these disclaimers. You can't over optimize the system. You have to trade the market as it's presenting to you on a day-to-day basis. And in market profile, a lot of that has to do with position. Where are you relative to the previous points of control? Right now, we're sandwiched between these two previous points of control on the NASDAQ. And you want to get a clear down thrust from here to continue your shorts, or you just want to stay out of the market because it's just going to consolidate and backfill in, and use your composite profile areas to find these low volume node areas to trade to if it's going on a counter trend move, if that's what you want to do. I just stay out of the market, and then I would look to put on a short position either at my low volume node area or at an upper value area to go short, because we sell high, right? So I hope you enjoy my templates. I've got good feedback from the customers who have purchased them. I will always work with you and provide you with any updates that are made to the templates as I add on or add other filters to them. Once you purchase the template set, that's, you'll get future updates. And I hope you have prosperity in the markets. Thank you so much.